Ladies and gentlemen, boys and girls, people of all ages, welcome to Debate Crypto in a world where hopium collides with common sense. Starring your hosts, as always, the Crypto Keeper, myself, and the one and only Blockchain Crusader. How we doing, Miguel?
What's up, man? Doing good. How are you?
Doing well, doing well. What do we got scheduled for the podium this evening?
We got crypto vocab.
Crypto vocab, also known as Cryptocabulary. Very nice, very nice. We're also going to be answering questions in the chat. So, guys, jump over to the live chat. If you're over in TikTok, jump on over to YouTube, Debate Crypto. We will be answering all questions there. And in between answering questions on this Saturday night, the special edition of Saturday Night Live, we will be doing Cryptocabulary. So, without further ado, I guess warm up the tires. It's time to burn out. Let's get it.
Nice, dude. Nice.
That was literally off the top. I literally forgot that I had needed my dad joke. So that's what you get for this evening. That was off the very tip top of my head.
So what vocab do you want to start out
All right.
with?
Yeah. Hold on a second. Let me pull this up here. Okay. So we'll start on, we'll start on some vocab. So we're going to start around the letter, I bet you guys can't guess, A, right? And then we're going to move forward from there. So we're going to start with one of the more basic terms that you just that you need to know as it comes to crypto. So let me start off with this real quick. I think a lot of people in crypto, what happens is they get into this and they start hearing people throwing around all of these different terms. And instead of actually like either writing them down or deciding, man, I need to look that up right now, they just kind of continue to hear it. I remember when I first got into crypto, it was overwhelming. And I was like, man, like what is a liquidity pool? And just things where I was like, what? Huh? And so what I would encourage all of you to do is if you hear a word that you don't understand, write it down. Right? If look it up right then. And so why we're doing this tonight is because I think it's super, super important if you're going to educate yourself to be able to learn these words and these terminology. It's just like reading a book. If you don't understand the word, you keep reading, you're lost. Right? So we're going to start off with just something basic, an address. And an address as it relates to crypto, a wallet, right? It's an alphanumeric string of characters that represent a reservoir/destination where crypto can be sent to and from. And I think this is super important, Miguel, because guess what we were just doing a minute ago? We were trying to send crypto back and forth, some ETH between each other. Miguel, when was the first time you encountered an address, and what did you think was cool about it? What did you not understand about it? Talk to me.
So the most stressful thing about the address is one of the things was that when I first started doing transactions, they always said, make sure that your transaction is exactly how you copied it, right? Make sure that when you're copying, if you have some type of hacker or something on your computer, they can change what you've copied. By the time you paste it, all they need to do is change a few digits here and there, and it's a whole different address, right? One digit is a whole new address. They could be changing it to their address, and when you send it, thinking that you send it to yourself, you're sending it to somebody else, and there's no redos in crypto, right? So the biggest stress was making sure that when I copied it, I'd read through every single little digit multiple times, right? Making sure that it was the exact same one that I'm copying from its original source, and that's the one that I'm sending it to. And that's been the most stressful thing ever.
Yeah, no, I totally agree. And actually, to this day, even as comfortable as I am with crypto, and you and I have talked about this before, when we are transferring crypto over to a hardware wallet, I literally send what would equate to a test transaction. And it's not even so much a test transaction as it is just a little I guess what I'm saying is I'm not sending over, $100 or whatever, right? I'm doing some larger transactions when I'm transferring over to a hardware wallet. And so what I do is I literally jump on and I'll do a small transaction. I'll wait for it to go through and then literally just repeat the transaction just in a larger scale. It makes me feel better. It's something that I recommend to anyone and everyone that is new to crypto. Send a test transaction, pay the small fee that's going to be there on the front end for what ultimately amounts to insurance in the long run. I think it's super, super important. So that's what an address is. And again, you'll use addresses a lot. It is as simple. Sending crypto is intimidating at first, but it's as simple as, like, when Miguel and I were just getting ready to send stuff back and forth, it was as simple as copying my wallet address to a clipboard and sending that address to Miguel and pasting it. And then Miguel takes that and he copies it and he pastes it. It is literally just saying, hey, we want this to go to, it's literally like a home address. It's like saying, hey, this is where this goes. That's what it is. This is its home. It's coming from here. It's going to there.
Yeah, it's just like an email address, like a website, anything, right? Yep. It's just a different type of digital address. And they're making it easier, right? What we were talking about yesterday with Project Zilliqa, right? Unstoppable domains. You can get a worded
explain
domain.
That.
So you can get a domain just how you can get a website domain, right? Like when you go to GoDaddy.com and you get a domain, well, you can go to Unstoppable Domains and you can literally buy a domain, which would be your wallet address. So it could be, whatever Satoshi
Cryptokeeper.bitcoin.
Yeah, Satoshi.bitcoin, right? And that would be your wallet address if it's available. If that domain is available, you can purchase it, and then you have to connect it to your wallet, right? There's a bunch of more steps in there that we're not going to get into, and then whenever you have to tell somebody your address, you'd be like, hey, just send it to Satoshi.bitcoin, and that's way easier than having a bunch of digits with numbers and letters and copying and pasting that back and forth.
Right. And so ultimately all it's doing is taking that really complicated set of numbers and letters and turning it into something that I could just remember and say, hey, listen, as we get more and more comfortable with this, it's going to be like, hey, listen, send this over to cryptokeeper.bitcoin. And that's literally the wallet address, which is a domain. So at any event, it literally is that simple.
We got a good question right here from YouTube, from Crypto Hodler 88.
Okay.
In your words, what's shorting crypto, and how would you do that?
Okay. Well, I don't short in a bull market. I will tell you that. And actually, I don't really short at all. But when you're shorting, you're trying to ultimately buy back, and this is the way that I would explain it. You're trying to buy back in at a lower price, right? And so you are selling at a well, I guess that's kind of the
you're pretty much betting.
Yeah.
You're pretty much betting that the price will go down, and you get paid when it does go down, right? It's just like when you're betting that is when you put in a long, right, with leverage trading, you're betting that's going to go up, and you're making money on the way up. When you're shorting, you're betting it's going down, and you're getting that buy-in at that lower price and selling at that higher price.
So that's a really simple way to explain it, but ultimately, really, the way that shorting works is you're actually borrowing, right? Mm-hmm. And then so basically, the investor is going to borrow it, then they're going to sell it, and then when the asset price, then the asset goes back. When the asset price lowers, it gets returned to the lender. And so they're basically the short sellers, what they're called. They are just betting that the asset will drop in price, and the difference between the sell price and the buy price, that's their
profit.
Yeah, that's exactly what it is. So that's actually a really complicated. That's one of the more complicated. Who asked that question?
Crypto Hodler 88.
Crypto Hodler. That's one of that is one of the more difficult things for people to understand as it relates to in the stock market as well, because ultimately you are borrowing from you're basically borrowing it at a price, right? Assuming that it's going to go down. You're sort of borrowing at this price, waiting for it to go back down. You return it back to them at this lower price, right? and because they're betting basically, you're basically betting against each other, right? And then that difference is what you're going to make. So great question though, really good question. We got any more questions in there right now? We're going to jump on to the next term.
Let's jump on to the next term for now.
All right, cool.
So another good question comes up.
Let's see here. That was a good one though. So let's talk about an airdrop. So an airdrop. Airdrop is a method of distributing cryptocurrency in which market participants do not need to exchange their existing assets for a new one, but rather receive it based on some prerequisite factors, such as holding a parallel cryptocurrency. Miguel, hit it. Talk about an airdrop in layman's terms.
So in easiest terms, right, it's basically you hold an asset and they tell you, hey, if you're holding asset A, right, and maybe they have more prerequisites, as in like you have to hold a certain amount, it has to be within a certain date, right? They're going to take a snapshot of after this date doesn't count anymore. So they tell you, hey, if you hold, as an example,
XRP.
Shiba, XRP, Shiba, whatever, right? You hold X amount of it by this date. Everybody that has that amount by this date will then get, pretty much gifted another currency. They can also airdrop you an NFT, right? They can airdrop you many things. And even NFTs are doing this now. If you hold a certain NFT project, the project will say, well, if you're still holding by this date, then you will be gifted this other thing, whether it's another crypto or something, right? Some type of reward for holding on to this primary original asset.
So airdrops have drawbacks and positives, right? The positive is obviously very obvious. They are giving you something.
They're giving you something free.
Yeah, they're giving you something for free. The drawbacks are the tax implications, and there's a lot of misunderstanding there and clarification that still needs to happen, which is still kind of being argued back and forth as we speak. There's still not a lot of clarity on how we are being taxed on an airdrop, because technically it is a gift. However, part of the argument is, hey, you are holding an asset with the basically understanding that you're holding it to get something else, so you are expecting profit off of it. So they're trying to tax it that way, as if it were capital gains. And so there's some disagreements there as to whether that's actually going to fly or not. But as of right now, that is the argument that's being made. But airdrops are great. I think that they had one of the more successful airdrops that I remember, that I know of, was the Uniswap. And when that happened, it was absolute. I think, and
Uniswap had a big airdrop.
Yeah, and if you held from the time that airdrop happened, I think if you had what equated to $1,000 worth of it, it turned into some really large numbers, just from the standpoint that the Uni tokens absolutely mooned, because Uniswap became what was essentially one of the largest DEXs, decentralized exchanges, around. So yeah, airdrops are cool. They're used ultimately to entice you to either hold or to go ahead and buy something so that you can receive something else. So let's see here. This is a good one for TikTok. Algorithm. Algorithm is coded instructions or rules that are executed by a computer to solve problems. Let's go to the software engineer over here to this one. Miguel, explain a little further for me what an algorithm is and why it has anything to do with crypto.
Yeah, so an algorithm is any set of instructions that is any type of program, right? And a program is basically a set of instructions. If this, then do that, and you take in a bunch of different edge cases, and for every possible input or situation, you have a behavior that you're going to expect the program to do, and that is what an algorithm is, right? Just like TikTok. It expects that if your viewers on your live are smashing that like button, the more likes it's getting. Well, then if we're seeing that this person, Crypto Keeper, is getting a bunch of likes on this live, then the algorithm is going to push its live out to newer viewers to be able to see it on their For You page and jump in.
Are you guys catching the hint there that was just thrown? That was pretty opaque. However, smash the likes, guys. Thank you for being here. We appreciate you being here on a Saturday night with us, guys. Drop the questions in the chat. If you are following on TikTok, you see right above my head, boom, 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 sub over there and come over and join us. We're having a little bit of an education sesh this evening. So next up, altcoin. This is a special favorite of mine, and because my girlfriend is the ultimate, no pun
Altcoin.
intended, ultimate altcoin. Altcoin, the umbrella term used to define all crypto assets that are not Bitcoin. The alt simply stands for alternative.
Yep.
This one is really straightforward. It is literally as simple as if it's not Bitcoin, it's an altcoin. Now, that being said, my girlfriend, which I talk about often, is ETH, right over here. Yep. I'm like still learning how to do this backwards. There she is. So ETH, a lot of people will argue at this point and say, listen, ETH is no longer an altcoin. There is Bitcoin, there is ETH, and then there are altcoins. However, let's not get caught up in that. Technically, anything that's not Bitcoin is an altcoin, and altcoins are what you're going to hear when people say, "Oh yeah, the alts, it's alt season." Well, that just means that everything except for Bitcoin is absolutely pumping and or about to be pumping. So I don't even know, Miguel. Do you have anything to add to that
No,
about
I don't have,
altcoin?
I have anything to add to that. I want to jump in and I want to start on the Bs. You can keep going through the A's. I'm going to start one
Okay.
on the Bs.
All
So
right,
the
cool.
first one I'm going to go into is burning, right? We
Okay.
hear that term a lot now. It's a big buzzword. Oh, it's having a burning, right? Solana said, kind of had a hint that they were going to start burning. It
Mhm.
popped off, right? So what burning is a method where the crypto asset is sent to a wallet, to an address that nobody can retrieve it from, or because they can't technically destroy it. So they're basically just locking it up somewhere, and then it can no longer be spent. So it's taken out of circulation and therefore causing a deflationary mechanism, right? The same thing you can say about Bitcoin. Bitcoin has had a lot of coins that have been lost through time in hardware, in old PC laptops, hardware drives that will never be recoverable. So the supply of Bitcoin has actually dwindled because of that. So that it was an unintentional burning effect, reducing the circulating supply.
Yeah, and burning actually is one of the key ways that stable coins are actually kept stable. So what will happen is there will be added supply and there will be burnt supply to essentially keep it at that stable level of a dollar, right? And
Yeah.
that is one of the ways that they do that as well. So the burning mechanism is super important. It
Yeah,
is.
people forgetting their passwords. That's right, Crypto Hodler. Tons of people forgot their passwords from back in the day.
Oh yeah, yeah. Lots of Bitcoin that's just like not here anymore.
Just burning away.
Let's see here. Let's talk about ATH all-time high and
That's right, baby.
and then I'm going to do ATL all-time low, not Atlanta, ATL all-time low.
Gotta
So
represent.
all-time high. It's just the highest price that's ever reached by an asset. You're also going to hear local high when you hear someone say, though it's at a local high, it just means within a certain time period. Maybe they're talking about the last month, the last 60 days, whatever. That'll be a local high within a section of a chart. And then ATL is all-time low. It's just the lowest price that an asset has ever been at. When you look at all-time highs and all-time lows, the one thing I will say is that a lot of people use these as a metric to be able to say, okay, do I think this is a good investment or do I not? The problem with that, okay, is that I don't think that this market is the exact same as the 2000 16, 17 bull run, right? I don't think they're exactly the same. And if you look back, there was a lot of assets back then that were at the top of their game that are like nowhere to be found now. And so I think that's something you really need to be careful with. It is, however, within a bull market, I believe, and within a bear market, a metric to look at with local highs versus all-time highs to kind of see some point of support and resistance as to where the asset price might sit down and settle down versus where it might take off.
Yeah, I completely agree. Right, with Bitcoin, the best way to see that whether it's a good asset to invest in long term is just looking at the yearly all-time lows. Right, the yearly all-time lows keep getting higher and higher. So therefore, Bitcoin's biggest retracements, at the end of the day, if you hold long enough, you will always be in the winning. Instead of focusing on what all-time highs is Bitcoin hitting all the time, focus on the yearly all-time lows. Hello.
Hello.
Oh, there you go. Okay.
Oh,
Thought we lost
no.
you for a minute.
I literally thought you were about to say something else, and I was trying to give you. I was trying not to.
You literally didn't move.
Guys,
I
that
was
was
like,
what we consider a dramatic pause in YouTube land. I was trying to give my partner over there an opportunity, but he didn't take it. So I guess I'll give the next one. Hold on, this is a B, and I love it. Bag holder. You're gonna hear this a lot, right? Bag holder. It's a cryptocurrency trader / investor that is stuck holding large amounts of some crypto asset that have severely depreciated and cannot be sold back into the market for a relatively decent price. Let me make this simple. Bag holders. Okay, there is a difference between smart money and dumb money. Smart money is the institutions. It is the big money. You and I, right? The retail traders are dumb money. They want us to be bag holders. What the smart money is looking to do is looking to manipulate and move these prices such that you are buying the tops and selling the bottoms versus the other way, buying the bottoms and selling the tops. They want you to be the one holding the bags. They want the blow off top to happen, and then you purchase Bitcoin. It's like in April when it hit 65K. They wanted you buying that 65 number, and then it starts to plummet, and you are left holding the bag. You are the bag holder. That's what that is.
Yeah. The next one I want to go into is actually a 2-word combo, and it's blockchain, right? And to understand what blockchain is, you understand what a block is. So first, let me start off with blockchain. Blockchain technology is basically the open ledger technology that allows you to think of it as a book, right? It has a sequence of all the different transactions that have happened, all the data that's happened, and you can go back and check. Okay, let me see. All right, this guy did this transaction this day, sent it here, there. And what a block is, right? All that information are stored in blocks. So it's a sequence of blocks all linked together. The link is the book frame, right? And all the blocks are pages. You can only put so much information on one page before you have to flip the page and go to the next one. So when a block is filled of transaction data, whatever it is, then that block is discovered, it's done, and then you move on to the next block, and then that block has been mined, added to the book, and then you go on to the next page. You create a whole new page of transactions and information, and then boom, you put it on there, and that's what blockchain technology is, and that's what a block is.
And I think it's really interesting, Miguel, to also remind the viewers that a block is that digital file, which is, they use the word immutable, which ultimately is saying, hey, look, you can't change this. Okay, it is going on there. So think of it as this. You have a big Excel spreadsheet in which all of this is the easy way I like to look at it anyway. You have this big Excel spreadsheet that has all of this data that's put onto it, and you can't change it. So it goes on there, right? It has any and all information on there on the network. They have timestamps on there, digital signatures, what the transaction was, the sequence in which things happened in. It is data that is not going to change, and that's ultimately the beauty of blockchain technology as well, because you can't go back and make changes, because then you ultimately when something happens, it happens.
Yeah, 100%.
Miguel, we got a good
question here
in the chat. Yeah. So first of all, Goran, you are very welcome. We appreciate all of you that are following, guys. If you get out of the live chat, smash the likes, jump back in. That is super, super appreciated. I can't answer one of the live chats right now because it's in a different language. So, my friend, I apologize. I don't read. I'm going to say that's Chinese, but I'm not positive. I don't want to offend, if I'm wrong. But any confidence with bots to buy for you, Miguel? We actually talked about this morning. So why don't you jump on this?
So the problem is, bots are useful, right? But you need to understand who is creating these bots. What are, you need to have a lot of good understanding of who's creating the bot, what kind of algorithm the bot is using. But at the same time, you need to realize bots can be manipulated, right? This is why we see gigantic drops in the market sometimes, because whales and big money knows that there are a ton of bots sitting looking for support lines and resistance lines, right? And they know that if they can push the price below a resistance line and we can't overpass that resistance because the whales are putting sell pressure, the bots are going to be like, okay, this is a resistance line, we can't get over it. What does our algorithm say? Sell here, take profits, right? And then that selling activates more selling to other bots. Other bots are picking up the algorithm. Oh wait, there's a big correction happening right now. I need to save my profits. Sell, 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 and then we see a gigantic manipulation of price downward. Same thing happens on the way up, right? Things get pushed down so far that the bots are saying, wait, this is way too low. We need to start buying back up. Perfect time. And then you see a gigantic buy order because all these bots algorithms get activated. So there's manipulation in that. So be careful with bots. They do work, but they are also very manipulative and you can lose a lot of money. So be very careful.
One of the things I want to add to that, Miguel, and this has been something that people are actively trying to change, is it is very hard to program a bot to take into consideration outside factors, fundamental things going on in, let's just say, the news, right? And I know that there's people actively trying to figure this out, trying to change this, trying to make this work, but that is a factor that makes this exponentially harder because listen, they can look at the data and the data sets that say, hey, when it gets to this, we're selling, we're going to take this little profit, we're going to do this, we're going to do that. Hey, this is a wedge, this is a double bottom, this is a top, blah, blah, right? They can analyze all of that data. It's hard to analyze the data for Elon just said that Tesla is selling or is going to be buying Bitcoin. And it's not that the actual wording is tough to figure out. It's that sentiment as part of a news article is very hard for a bot to be able to look at and say, hey, this is bullish. This actually changes the physical raw data that we have and the data sets information that's there.
Yep, 100%. So
let's see here.
You want to hit another question? We have, I believe we have another question here.
We said we'd hit all the questions.
So the question is, oh crap! So it's manipulated by big whales? ?
I have a one-word answer for you. Yes.
Yes.
Yeah.
All markets are manipulated.
Yeah, it absolutely is. Any sort of investments are manipulated. There's no getting around it. This is not like, Miguel and I have a tinfoil hat on and we're just saying, oh yeah, it's like this big, crazy, thing. It just is, right? And at the end of the day, think about it this way. If you had enough money that you could actively move the price of some of these assets, especially the altcoins that are not nearly as big as Bitcoin. It takes massive movements to move Bitcoin around, right? Almost a coordinated effort, okay? That coordinated effort happens actually quite a bit. And if you think that it doesn't, look at the move that happened the other day. The move from 52 flash down to 42, that is a 20% correction in an hour. I don't have the math on me right now, but it is a massive amount of money. This is not a coincidence. It's not that it got to 52 and all of a sudden everybody was like, hey, randomly, like everybody was like, yeah, I think I'll sell that. No, this was a coordinated effort. So it does happen. Okay. But the smaller alts that don't need as much easier to make it happen. Think about it this way. If you could move that price and you knew that you could cause people that were newer to the space or that just weren't as confident in the space or weren't as educated in the space, if you could cause them to sell, right, they are ultimately getting you to do exactly what they want. They want to sell, create pressure for you to sell. It drops the price even more when you guys are selling. And then guess what they do? Swoop back in, buy it up. Price starts to pump. Guess what you do? You jump in because it's pumping and you're excited. Oh, shoot. Now all of a sudden you just bought the top. And guess what? They're going to sell and it's going to start dropping. And then you're going to get scared and you're going to sell again. And so, yes, this ultimately, the sad thing is manipulation. That is why, and that I will live and die by this statement: swim with the whales. So if you can find what the whales are actually doing, which there's a lot of data out there. I mean, shoot, there's something as simple as on Twitter, whale alerts. It's literally somebody that literally puts out when big whale movements are happening. You pay attention to something like that and do what the whales are doing. Swim with those whales. Generally, as a rule, you're going to win.
Yeah, just be careful. Not just because whales are transferring large amounts into exchanges doesn't mean that they're actually going to sell something. Most of the time, that is what they're going to do, but sometimes they do that just to psych you out and make you think they're going to sell, and actually they're just flooding you out of the market because they know they can create a panic sell.
Goran was also asking wanted to ask what's up with VeChain.
Where is that?
It's a few questions down. But that's okay. If you can't pull it up, if you don't see it, I see it. You see it?
Oh, I see it.
So I did that. Wanted to ask you what's up with VeChain. So I don't know that I think anything is up with VeChain. What we need to remember is that the money flows happen. All like there's money imagine this big pot of money just getting mixed. Well, VeChain's going to get its turn. And as people are making money in Bitcoin, we've talked about this a lot. Money drops into Ether, usually into Ethereum, right? And then as people take profits from Ethereum, they dump it into projects like VeChain. And so as that happens, without any actual fundamental news coming through about specifically VeChain, without that happening, VeChain's just got to wait its turn. And it will happen. It is a fundamentally great project. I do believe we still have at least a 5x to go from where we're at right now. I think VeChain's at 11 cents right now, unless something's happened while we've been on this stream. I think VeChain's at about 11 cents. Yep. I think we're going to see at least 50 cents. That in my estimation is a fantastic return. And I think we are going to see a nice upside on VeChain. It just needs to wait its turn.
So next term I want to hit is gas, and I'm not talking about what comes out of your back end. Gas, right? Gas is the micro payment that you make to the miners or the proof of stake, whatever it is, the stakers, right? That allows you to coordinate your transaction. So depending on how much gas you're paying is in what order your transaction is going to be received. And that leads to the term gas wars. And with all this NFT craze, gas wars have become a bigger thing again. And that basically means gas wars is people are anticipating and reading. There's websites like I have one pulled up right now. It's called gasnow.org. And it pretty much tells you what the average gas price is right now. But when there's an NFT minting moment or session or whatever, people anticipate that there's going to be a lot of more transactions on the network. So therefore they raise their gas price on their own personal wallets, so that way their payment can get what's the word?
They can get transaction pushed through, validated.
Yes, they can get their confirmed. They can get their transaction confirmed before other people, and therefore you're pretty much cutting the line, right? Everyone's paying the average gas price, and then you're going well above beyond what the average gas price is at the moment. Then your transaction cuts the line and goes first, and you get the NFT or whatever it is before anybody else, and it speeds up transactions. So that's basically what it is.
Cool. Let's see here. I wasn't looking in the chat here. Let's see here. Rob wants to know how many
Bitcoin do we hold?
How much crypto we're holding. I'm not really that personal about. I will answer this. I will answer this way, Rob. I am not shy to tell you guys what I'm holding, but I will say the reason I don't like to do it is because what you need to understand is like I've been in this for some years now, and so it I feel like it can come off sometimes when you start talking about stuff like that as a flex, and it doesn't need to be. This is ultimately about education, right? So I'm not scared to answer the question. I'm just and ultimately, you should be asking me how much ETH I have, not how much Bitcoin I have. But let's just say I have more than one Bitcoin, and ultimately that's going to be worth quite a bit of money. I have some multiples of Bitcoin, and so does Miguel. But yeah. No need to flex. By the way, I have a shit ton of ETH. Anyway, no need to flex. I have a ton of ETH. I'm sorry, YouTube. Please don't kick me out for cussing, and I just apologize for any of my church friends that are in the live stream right now. I apologize for the flex there with the language. And Rob, no, we know, dude, you are absolutely fine. We just wanted to have a little fun with that. So here we go. Crypto Hodler. What's staking and also being in a liquidity pool? So, well, I guess, do you want me to hit it, or you want to hit it? What do you want to do? Miguel, you there?
Oh, I was on mute. Sorry. I just said I just came off the gas, so you can take this one.
Cool. All right. So a liquidity pool is to make it really simple. A liquidity pool is just where you are putting a bunch of your crypto, right? A bunch of your money into a pool of money where people are able to utilize it. They're able to take loans off of it. They're able to just absolutely they're able to use what you have, right? No, you're not swimming in it. Well, you could swim in the figurative crypto because there's a lot of it, right? But ultimately, yeah, liquidity pools allow people to become their own bank, and it's a big part of DeFi. So imagine this. Let's just say I have 248 ETH, right? And let's say that Miguel has the same thing, right? So let's just say we have 500 ETH between the two of us, right? We could have a pool of that money, right? And I would have 50% of that pool. Miguel would have 50% of that pool, and we get paid our rewards off of what percentage of that pool we have. Now, other people can come in and grab from it and be a part of it and deposit. And so it's just basically a big place where a bunch of people can put together crypto and say, hey, other people can take loans off this, and you earn rewards from staking, which is ultimately putting your asset there for other people to use. That's the simplest way that I can explain it, and it is what it is. You are putting up your crypto and saying, hey, look, I'm going to set this here. All of these other places and people can utilize this. And there's a smart contract in place that says, hey, I'm going to get X, Y, and Z as a result of putting my crypto in a liquidity pool for staking what I have.
100%. That was perfect answer.
That's a great answer, or that's a great. Well, it was a great answer too, Nick. Good job. That's a great question. That's a great.
Or we got a question right here from Rob. What's the biggest gas fee you have ever paid?
Ugh.
What is the biggest gas fee you've ever paid? I don't think I've paid too big of a gas fee.
300 and somewhere between 280 and 350, right in there.
Okay. Yeah, I've never paid past 300, but I have paid high 200s.
Yeah, I don't think I've ever paid over 400. I think 280 to 350 is the best answer I can give you on that. Yeah. What you get to a point with gas fees where it doesn't even matter the amount of the freaking transaction. It can be a massive transaction, or it could be. I remember one of my
tiny transaction.
Yeah, that's what I was gonna say. So I remember one of my buddies when he was all into the pump coins and he was trying to buy this stuff on Uniswap, and he's like, bro, he's freaking insanely loaded, and he's got literally like a massive, lots of $1 million of portfolio. He said, bro, I just want you in this with me, man. So I'm just gonna send you 1 ETH worth of this right now. And I'm like, dude, don't don't know. Don't. And all of a sudden it's in my wallet and I'm like, bro, like, it's just somebody that just, you're not going to tell him no, he wanted to do it. Right.
Yeah.
So I let him do it. But the deal was I had to buy this. You guys know how against I am of like crap coins and pump coins. Right. But the deal was once he sent it, he basically committed me to buy this crappy coin. Right. And so I did. All right. But I didn't buy a lot of it. I bought like $1,000. Well, okay, hold on, back up. When I say $1,000 is not a lot, I don't mean it like that. I'm just saying it wasn't like some massive number. It was $1,000 worth that I was buying at that point. And the gas fee was literally somewhere around $300. Now think about that. That is a 30% transaction fee to make that happen. That is what we call nuts, because think about it. For me to earn back, for me to break even, I've got to pump 30% on my bags. So sometimes gas fees get wild.
Yeah, the only time I've paid this high gas fee that I said is just for this crazy NFT stuff, trying to, get in line and try to be able to mint one of these NFTs. If not, trust me, I would be avoiding them like the fog around the world.
I don't know why my background just disappeared I had to put it back up there on TikTok. So, all right.
Crypto Hodler's got another good question here.
Yeah. Which exchange? Now, are you asking if a witch? No, I'm just kidding. I was literally about to critique your spelling, Crypto Hodler, but I love you, bro. So I'm not going to burn you at the stake for your spelling of witch. Okay. At any event, which exchange do you both use? What's the best in your opinion? Crypto Hodler, this is a really good question, and I don't think I have a great answer for you, because at the end of the day, I think that you should be using a safe platform that you are comfortable with. Dude, I was literally just busting on you. I really like Crypto.com, and I really like Coinbase Pro. Those would be my just initial go-to. I like the ease of use with Crypto.com. It has a lot of options, and then I love the low fees of Coinbase Pro. Miguel?
Yeah, I would agree with that. I don't use Crypto.com, but I do use Coinbase Pro. I use KuCoin, and I use Binance.us.
Moving on. Let me see here. We got another. We're going to stay on here. We're going to stay on a little longer tonight, guys, just because we can cut this up, and there's lots of vocab terms and stuff. Miguel, you still good to stay on for a little bit?
Yeah.
Okay, cool. Let's talk about KYC, because this is something that you are going to hear a lot, and it's something that a lot of people hate. Now, we totally got off on the A, B, C, D, whatever. You can blame Miguel for that. He jumped in the middle of the alphabet a little while ago, so now I'm going with it, okay? So KYC is an acronym for Know Your Customer, Know Your Consumer. It's a set of rules laid out by the government for companies to obtain a certain amount of information from their participants. Let's call it what it is. This is a way for our lovely government to say, well, Nick, you have bought X amount of ETH off of this exchange, and then you sold it for profit here on this date. Therefore, you owe capital gains. This is very simple.
Yep.
This is for tax purposes. There is no other purpose besides just being able to track and ultimately, scrape your data together to know what you're doing, when you're doing it, how you're doing it, and what you're doing it for. But at the end of the day, this is for tax purposes. I don't think there's any other reason to have KYC.
Yeah, exactly right. It's all part of the the laws that they have in place already for securities and all these kind of scenarios where these brokers need to have that information.
Yeah. No doubt.
So we got Rob here with another good one.
Man, Rob, you're just killing it tonight, bro.
Do FUD for the new people. Fear, uncertainty, and doubt.
Starring FUD, fear, uncertainty, and doubt in a world. Yeah, go ahead, Miguel. Hit that.
FUD. Yeah, so FUD, fear, uncertainty, and doubt, right? FUD is what's called when you start seeing all this narrative coming out in the news of bad things, either speaking bad about Bitcoin, speaking bad about the crypto markets in general. They're too volatile, they're too risky, they're unsafe.
Yep.
China's banning Bitcoin, it's all over, Bitcoin is dead, right? We're all going to lose our money. And then
What's the idea behind FUD, Miguel?
Yeah,
Generally.
yeah, exactly right. So I'm getting to it. So basically, then that starts creating a psychological effect in people. It's like, oh, I should need to get out of here before I start losing money, right? So the fear starts to spread, the uncertainty of you don't know if the crypto is going to survive, is Bitcoin really gonna die out or not, and then you have the doubts of I'm not gonna keep my money here. I don't think it's safe. You start panic selling, prices start coming down, the market start collapsing, and then what happens? The whales come in, they scoop up all that not free, I should say, all that cheap crypto. They pack their bags, and then they tell you, hey, it's safe now, it's amazing, you guys should definitely get back in.
Let me ask you something, Miguel. True. Now, guys, we keep it 100% real here, so I'm going to tell you my side of this in a second. Has FUD ever negatively impacted you?
Psychologically, yes, but I got diamond hands, baby. I never sell.
Listen, I'm not going to lie. When I first got into the crypto space, FUD really messed with me.
Yep.
It was one of those things that I didn't truly understand yet. And when you see, okay, so I was brought up to believe. Let's go before 2020, right? I was brought up to where you watch the news for relevant information that is going on in our society. Now the news is literally, I think, to basically push an agenda. And it's the same thing in crypto. And that's what FUD is for. It's to put fear, uncertainty, and doubt in your mind. And it really worked for me at first when I got into the crypto space, because let's call it what it is. It's scary, right?
Yep.
I literally would be seeing all of this. Oh my gosh, like back in 2017, China's banning Bitcoin, India's banning, everybody's banning Bitcoin. Oh my gosh, the whole world's just going to ban Bitcoin. It's going to be gone. I can't believe I put all this money. Oh my gosh, what did I do? Right? And it's scary. It really is, until you recognize what it is. And it is, hey, let's see how scary of a headline and a story we can put together here to make all of these not very well educated people sell their bags because we want to buy them for cheaper. And it took me a little while to figure that out. Now the FUD does nothing but tick me off, because I look at it, I know what it is, and I take it for what it is. And it's not right. It is literally using a platform to hold people down and to make them make a bad business, a bad investment decision, because they are scared, and it is wrong.
100%. So we got a good question here as well. Another good question, but people are on fire tonight with these questions.
Keep firing them, guys. We said we'd answer the questions. Let's keep firing them. Oh, hold on a second, real quick. With that, Crypto Hodler said FOMO. FOMO is fear of missing out. That is literally, you see huge green candles, you see the charts just absolutely running. You're scared you're going to miss out, and you buy in. So
you buy. Yep. It's the opposite of FUD.
The opposite of FOMO, or I mean, the opposite of FUD. Yep.
Yeah. Where is it? Okay, here you go. Are liquidity pools yield farming safe if they're non-custodial? I don't know. I don't know if I have thoughts on that.
Okay. So I think that anything that's non-custodial right off the rip, non-custodial, for anyone that's wondering, it means you are not the one that holds on to your keys. Okay. You don't have your seed phrase. You don't have your keys to your crypto. Right. And so anytime that's the case, there is risk involved. And let's be clear, there's risk involved in anything and everything in crypto. Okay.
Oh, 100%.
So that's just a fact, okay? You need to understand that there is something called impermanent loss when you get into, now this is a much higher level term. This is a much higher level thinking. This is a much higher level move as it relates to concept, as it relates to crypto. But impermanent loss is basically the idea that, and I wonder if they actually have do they have the actual definition? No, they don't. I mean, I could look it up, but impermanent loss. Let me read you the actual definition here. I can give you a really better definition here, is loss that funds are exposed to when they're in a liquidity pool. This loss typically occurs when the ratio of the tokens in the liquidity pool becomes uneven. Although impermanent loss isn't realized until the tokens are withdrawn from the liquidity pool. Basically, when you're in a liquidity pool, you have basically a pair that you are providing either one or both, usually both, of a pair of assets. Okay, and when one of the two, absolutely, like the ratio gets thrown off, one of the two, the price really drops on it. Now all of a sudden it starts messing with your
kind of the balance, kind of like a
yeah, with
scale balance,
with
right?
essentially the balance that's there, and so ultimately you lose money that way. It's just the difference between the assets that you're holding. Like, so basically, if you are on Uniswap and you gain, let's see here. Let me simplify it even more. Basically, it offsets the scales, and now all of a sudden, one is worth quite a bit more than the other. And think about this. If you had 50-50 all the way through and you're making your percentages, you're making it, you're good, right? All of a sudden, it goes up to like 80-20, and there's that difference to where it's trying to even it out, right? And that's where you're going to start to lose. So that's kind of
that stuff.
risk.
Yeah, that stuff happens because when you are providing, right, let's say whatever it is, BNB or whatever coin is that you're providing, it doesn't stay in that form. Some of it gets converted to the other token to create that balance. And when you see that drop happen, you're technically getting kind of liquidated. You're losing value in that you provided. That's where the impermanent loss comes in.
Yeah.
So
literally, literally, he said non-custodial, which non-custodial is saying you have your own keys. I just said that totally wrong. And so custodial, it non-custodial means they don't have custody of. I just flipped it for you. Non-custodial means you have sole control of your keys, right? So you control it. There is still that absolute risk there, which is impermanent loss. In the difference,
there's nothing you can do to control that.
With custodial, someone else controls your keys. So I apologize for saying that backwards. I was thinking from the user standpoint. It is from the exchange's standpoint. If it is custodial, they have control. If it's not custodial, you have control. I just flipped it on you. So thank you very much for grabbing that, because I didn't realize.
Think of BlockFi, Celsius, stuff like that as custodial.
Yeah, exactly, and that's actually what I just flipped it. I didn't realize it said it that way. So, thank you, James, for catching that. Appreciate ya. How about Jacob Potter? Jacob Potter says, I came into crypto this year, but I followed the influencers before getting in. FUD bounces right off of me, but I panic buy for sure. Jacob, I just wanted to touch on this because panic buying is a real thing as well, right? And that panic buying is a really nice way of saying FOMO, right? Panic buying is saying, oh my gosh, everyone's talking about this asset. I've got to get in. I've got to get in. I've got to get in. That is exactly the same thing as FOMO. Jacob, let me make a suggestion to you as it relates to the influencers. First of all, I hate the word influencer, but okay. If you want to consider Miguel and I influencers, right? What I want to tell you is that you should be not just listening to both of us or Crypto Weatherman or BitBoy Crypto or any of these people. You should put all of that together, then feel out and make your own, decision to whatever it is that we're talking about. And then when you have that, then on top of that, you need to do some actual reading and investigation, because if you just listen to what other people say, it's kind of like asking somebody if, when oh, hey, should I invest into this internet thing? And it's back in the 90s. And one of your buddies says, dude, don't do that thing. It's not going to do, you're going to lose all your money. You know what I mean? The people about Bitcoin in 2009, 10, 11, that's the stupidest thing I ever heard. You're going to lose all your money.
Me, bro, me. 2017, early 2017, January, right? Bitcoin's at like $1,000, 1,200. I asked a buddy of mine that is in the financial sector, hey man, what do you think about this Bitcoin thing, right? I got some money I want to invest. I I had about maybe like $4,000 to $5,000 to invest. So I could have bought 4 or 5 Bitcoin,
Yeah.
right? Give or take.
Mhm.
And he was like, "No, dude, that's for criminals. Don't do that. Don't get involved in that. You're gonna, just save yourself the headache. Just, invest your money in the stock market. You'll be fine." I was like, okay. Did zero research of my own, right? All I knew was Bitcoin. I knew that it existed. I had a Coinbase app, but I never knew anything about Bitcoin outside of that. Didn't know what blockchain was, nothing.
Yep.
So I got in the stock market, lost $2,000 in like a matter of a week. And then I said, well, screw this. And I started doing my own research, right? I took a break from investing for a few months, but I saw Bitcoin kept going up and kept going up and going up. And I was like, this is a Ponzi scheme. There's no way that this is real. Like, how can this thing keep pumping? Then I started doing my research. Then I said, oh, this is what Bitcoin is. Yep. This is what Ethereum is. Oh, I'm an idiot. And that's what happens when you don't do your own research.
Yeah, I'm totally with you. So actually, one of the other things here is I believe Robinhood keeps your keys. Yeah, Robinhood is custodial, but Robinhood, let's go one further than that. Robinhood is basically a derivative. Okay,
yep.
And a derivative is basically where this thing is based on something else. So ultimately it is saying, hey, you're not actually ever going to be able to, at least right now, you're not ever going to be able to actually have control of, and like, okay, if you have crypto on Robinhood right now, you could not, and I said, hey, send me some ETH. You couldn't do it. The only thing you could do would be take profits, which, by the way, that is a taxable event, right? And then you could send me fiat, but you couldn't actually send me any ETH or Bitcoin. So it's a derivative. It is basically in paper form, kind of like an IOU. It says, hey, you own this, but all you really own is whether the price goes up or the price goes down. That's what you own.
Yeah, you just have a certificate that says, Peter owns this much of this, and if he wants to sell it, he'll get paid this, but you don't actually have the asset in your hand at all.
Yep. Miguel, what's dollar cost averaging?
Dollar cost averaging, right, is the best strategy to use when it comes to investing long term, just for the simple fact that if you're trying to time the tops and the bottoms, you're probably going to get burned if you're not a good technical analysis trader. So dollar cost averaging is the easiest way for new people to get into the markets. What is dollar cost averaging? It's basically the strategy of putting X amount of money, whatever you decide that is, right? X amount of money for X amount of time, right? So you're pretty much put, let's say, $100 every 2 weeks into an asset repeatedly. So it doesn't matter if the price is going up at that moment or the price is coming down in that moment. Every 2 weeks, you're putting $100. So you're slowly accumulating an asset, right, for the same amount of money for an X period of time, and that way you just accumulate and you pretty much balance out your range, right? Sometimes you buy a little high, sometimes you buy a little low, and you average somewhere in the middle of what that asset price is that you've been buying over that period of time.
Yeah, I love dollar cost averaging. You guys know that.
Oh yeah.
I mean, it is
bread and butter
the easiest, most straightforward way for someone that's just getting into crypto to say, hey, look, I don't really pay attention to the market every day. I'm in this for the long haul, and I want to invest money that I otherwise wouldn't be, and I don't really know a whole lot. Then I would say, hey, dollar cost average. Even if you do know a lot, dollar cost average, listen, Miguel and I have been going back and forth as to whether we're taking profits, not taking profits, taking, loans against our crypto, like what we're doing at the end of this, what we believe to be the end of this bull cycle here soon. And there's so many advantages, disadvantages, this, that, the third. But the reality is, on ETH and on Bitcoin, I continue to buy at prices that I believe are beneficial for me in the long term. Okay. Dollar cost averaging in the most truest sense is more, hey, listen, I get paid every single Friday. I'm going to put X amount of dollars in, and Doesn't matter where the market's at that point. And basically what it says is mathematically, the statistics show that you are going to have an overall better average price. But because the market does this, right? It's all over the place, right? So you'll buy here, 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 you'll buy here. And overall that average is what works out really well, as opposed to trying to time the market.
So we have another good question here. Pretty loaded question, but basically, outside of the white paper and official website, what are some good resources to explore when you're interested in a particular project? You want me to take that, or are you?
Sorry, I was looking at something. Sorry. Aside from the white paper and official website, what are some better resources to explore when you're interested in a particular project? You can take it, Miguel, but I will just say this. The white paper is a sales technique. So just keep that in mind when you read a white paper. It is essentially selling you the idea of what the project is. It's a great thing to read. They're like 90 pages long. Good luck, have fun. You're gonna fall asleep for half of it, whatever. But there's a lot of it that you can read that's super beneficial. But at the end of the day, most all white papers are a sales technique and a sales tactic, giving you promises for things that maybe have not yet happened. The official website, that can be as well. I will tell you that something really simple that I like to do is on CoinMarketCap. You can actually go onto CoinMarketCap and research these projects. There's all sorts of different options on there, and you can go into. I look at old news. I look at the founders, who's actually in this project, who are they attached to. So I'll tell you the biggest thing I use in a real simple form is Google. I'll Google who's involved in DAO Maker or whatever we're talking about, and you'll just dig and dig and dig and dig, and one thing leads to another, and Google is a beautiful source.
100%. That going, trying to reach out to the developers, right? So you can get in talks with them, ask questions, join the Telegram groups, join the Discords. They have a Discord, right? Join the community and test out the community, see what the community is like. And obviously, there's some communities that are, toxic. I've been wondering what you're doing, and then I've just realized you're talking about debate.
I'm telling everybody on TikTok, I'm saying, hey, look, they're asking questions on here. Go over to Debate Crypto, and you guys can ask all the questions you want. I'm not trying to be, a pain, but hey, go over there, subscribe, and guess what? We're answering all of the questions there. So if you have a question, literally, I will answer it. I promise you that I will answer it. So head over and subscribe. Sorry.
Yeah. So test out the community, see what it's like. Obviously, not all communities are the best, and you got to test the waters. Try to find their social medias, right? Instagram, Twitter. Try to see how many followers they got on there, right? That way you understand the kind of engagement that project has, and see what people are saying, right? Look up other content creators, see what they're saying, right? Get different reviews from different people, and start putting all this information together and start assessing it for yourself and coming with your own opinions once you have all this collective information.
And then read the Bitcoin Standard. I tell everyone that. I think that book is so important to. What are you doing, Miguel? You jumping?
No. I'll come right back. Give me a second.
Okay, cool. So read the Bitcoin Standard. I think that is super, super important. It will give you a basic understanding and knowledge as to what Bitcoin is, what is blockchain, how does it there we go. Literally, you have it much closer than I do. But yes. So that book is freaking fantastic. And so that's what it is.
That book changed my life, dude. That book gave me a complete understanding of financials that opened my eyes to a world that I was completely blind to my entire life.
Dude, I couldn't agree with you more. And it's almost scary. I almost felt a little stupid when I read that book, because
it's so simple. You're like,
yes. And you're like, wait a minute.
I didn't know this.
Wait a minute. How have I been this blind for guys, I'm just telling you, I wish you know what I need to fix. I need to get a referral code from, because I'll tell you what, that's what I want you guys doing. I want you guys reading the Bitcoin Standard. If you guys are going to be doing coaching and consulting with me, I think I'm going to make that a homework assignment. Like, hey, before we get together next, I'm going to need you to read chapters 1, 2, 3, and 4 of the Bitcoin Standard, and we'll talk about it. And that'll be that first 10 minutes. I'm not going to count towards our time together. Let's talk over the book. That's actually something I think I want to implement because that is a freaking fantastic book, and I think it's super important.
Yeah, dude, the amazing part of it is that it's called the Bitcoin Standard, but you do not start talking about Bitcoin until way later into the book, like halfway into the book.
Yep.
You don't even talk about Bitcoin.
Yep.
Just talks about what is money, how is money used, created, manipulated, what are real world examples of what's happened before in past history of currencies, and then you start realizing, holy smokes, this has been happening this whole time and I didn't know this. Does anybody else know this stuff? Why hasn't anybody told me this is what's happening with our money? Yep. Then you get into the Bitcoin stuff when you have a fundamental understanding of what money is.
Yeah, you know, one of the let me just say this real quick before we move on to the next one. One of the beautiful things about crypto is that, or one of the beautiful things about our financial system is that if you're willing to put some time into it, you can literally change your life, and crypto can be a huge part of that. We don't get on here, Miguel and I don't get on here and start like shilling like random projects like, hey, like let's pump our bags. Like I will tell you exactly what's in my portfolio, and I'm telling you what, everything that's in my portfolio are projects that are large enough that you are not going to be able to to pump, quote unquote, my bags, right? We are trying to talk to you about ways to truly understand finances and ways to take control, because I can tell you this, I have a 15-week-old daughter that is hopefully sleeping right now. That I want to take care of more than anything, right? I have a wife that I do take care of and want to continue to take care of. And it gives me so much satisfaction knowing that I understand money at this point, and I needed a lot more education on that. And as I read things like the Bitcoin Standard, Rich Dad, Poor Dad, I think is actually a really good book as well.
Oh, yes.
And I'll be honest, I'm not a big reader. I'm not. But once I got into crypto, I figured something out. I need to read. I need to get this information, because if I don't get it, no one's going to give it to me. And that's just a fact. You know what I mean? No one is going to just give this information out to you. I've got to actually, search for it and be able to ask the right questions. And part of asking the right questions is doing some research on my own.
Yeah, 100%. Thank you for the great comment. You guys have some good advice. Thank you. We greatly appreciate it.
For sure. Thank you guys very much. Let's see here. Let's talk about a DEX. Decentralized exchange is what DEX stands for. And basically a centralized exchange versus a decentralized exchange. A centralized exchange has a middleman. A centralized exchange would be basically the
Coinbase.
bank. Right? Coinbase. Yeah, I'm just saying they operate as a bank. They operate as an intermediary. They operate as the middle, right? And then a decentralized exchange would be PancakeSwap, would be Uniswap, and it's basically code it's open source code. And when I say open source code, and Miguel can correct me if I'm wrong about this, but open source code just basically means anybody can use it. It's code out there that can be written on top of, and it is an exchange where crypto can be traded back and forth without that middleman.
Yeah, open source code. When you guys ever hear that in any other project, basically means that anybody can see the code, right? The code is not hidden from you. Anybody that's a programmer can go look at it. Even you that are not a programmer can go look at it. You just probably won't understand what you're looking at, right? But
detail.
Exactly.
And read the code, but you're not going to know what it means.
But exactly, right? But you can go look at it versus something like Facebook, right? Facebook's code is not open source. Nobody can see how Facebook actually works. People can, make guesses and have people that are good programmers understand what they're doing and can replicate it in different ways, but they're not going to have the line by line access of this is exactly how Bitcoin's blueprint is. So that's what open source is.
Oh boy.
Wife just ordered the book. We'll have it on September 15th. Rob just ordered the book for me, and we'll have it on September 15th. Nice.
Guys, I'm telling you, You will thank us for suggesting that. I am just throwing that.
Ooh, we
Throwing
got a
that
good
out.
question here from Brian.
Yeah,
I
what's
don't
up?
think I've seen this name before.
Okay,
So why is it actually owing? Or are you trying to say owning?
he's trying to say owning.
Owning a coin important if you're trying to turn it to cash.
Well, let's both hit on this. I'll
Yeah,
start though.
go
So,
ahead.
Brian, check it out. One of the things that I learned as I got farther and further into crypto is my goal. And this took a long time. Okay, my goal at this point is to not think in the terms of, hey, how much can I flip this for cash? My goal now is how much of the asset can I stack? Okay, now yes, in the back of your mind, because you're programmed this way, you're going to do a conversion in your head. You're going to say, oh, I've got 10 ETH. So I've got, oh, what is that, about $35,000 right now or whatever, right? You're going to be doing those type of calculations in your head. But the facts are this. Inflation right now, I'm not going to get into the inflation, deflation, any of that of what's going to happen, but I'm just saying inflation right now is raising at an exponential rate, at an alarming rate. Okay. And so, actually focusing on the asset itself and understanding that it in itself has value, it has massive value, and it will continue to grow in that value at an exponential rate better than your dollar will. That I think is the important thing. So at the end of the day, if you can get yourself to a point, and again, not financial advice, but this is what it took me. It took me feeling this and learning this to really become better at stacking. It's not about flipping it back to cash, right? It's about owning the asset, because at the end of the day, there's a lot of people that will tell you the fact that we have more than one Bitcoin, the fact that we have numerous Ethereum, the fact that we have these assets is not going to be the norm as we get farther and farther in towards 2030, 2035, things of that nature. And these assets do have value. They
And
do.
scarcity.
And scarcity. Yeah. And so I try not to think of it that way. Again, it's in your mind. Yes, you do a quick conversion, but I'm not always trying to flip it back for cash. And I'll tell you, it's one of the discussions that we've been having lately this is high level money making and high level investments, but looking at taking loans against my assets, because then I'm not
Yes.
paying capital gains tax, et cetera, et cetera. And so what does that do? That has me thinking asset, knowing that these assets have great value in the long run. I am investing in a way that, for me, and this is going to be different from person to person, but I am investing in such a way that all of my bills are paid. I don't have any of that to worry about. And then my crypto is its own thing that I'm just trying to stack.
Yeah, exactly right. When I first started into crypto, I was thinking I'm going to buy this thing, I'm going to flip it, and then I'm going to go back into cash. But
Yep.
as you start learning more about Bitcoin, as you start learning more about crypto in general, right? What they are, what is what is the greatest transfer of wealth happening in our generation, in our lifetime, something that we will never see again, right? We're pretty much seeing the creation. We are experiencing the creation of a brand new market, right? It's like experiencing the beginning of the stock exchange, and you thinking, well, I'm just gonna sell this and go buy myself a cow after, right? So it's, why buy the cow when you can be holding a greater asset?
Right.
And crypto is that greater asset than holding fiat in the long term of things. And like Nick said, Crypto Keeper, owning these assets like Bitcoin and Ethereum right now, people are going to continue to get priced out. Most people are priced out of Bitcoin already. Owning one full Bitcoin is very difficult for a lot of people at today's prices. And today's prices seem high, but they're going to be a lot higher real soon, especially closer to the end of this decade. So owning one Bitcoin, owning one Ethereum is going to become a very scarce thing by the end of this decade.
Yep.
So that's why it comes to the moment where you're no longer thinking, I'm going to flip this for cash. This is the better asset, right? It's like, this is the example I like using all the time. The families that were buying real estate in New York when New York was getting started, they don't sell those properties because they have nothing better to hold than that. It's always appreciating. They can always borrow against it, reinvest that money. And when we say borrow, they're borrowing at very low interest, and they're reinvesting that money, growing their portfolios in other investments, and then paying back those loans. And they keep the asset at the same time as investing and growing their portfolio. And that's what it's all about. If you're just thinking about getting back into cash away from crypto, I think you need to take a deeper look at what crypto is and get a deeper understanding.
I totally agree. I totally agree. And Just James has, thank you for that, Miguel. Just James is asking a really important question here that I would love to address. It says, when you take profits, do you just roll it into USDC to avoid a taxable event? So let's know. The answer is no, but let me explain why and go a little bit deeper into this. First of all, for those of you that are new, USDC is a stable coin. It is pegged to try to be as stable as a dollar. It will stay between 99 cents and $1.01 as you look at it, right? And so the moment that you convert one crypto for another, you have a taxable event. Okay, let me explain something. In the stock world and in real estate, you have something called a 1031 exchange. A 1031 exchange is where you can take all of your profits from a like asset, which would be one piece of property, real estate, and put all of that profit immediately into another piece of real estate, and you don't pay capital gains tax on that. You can actually do that in the stock market as well. However, crypto, as of right now, you cannot. Now, I am voting and pushing and really want you to be able to, but the argument right now is these cryptocurrencies, these crypto assets have different properties. They do different things. Therefore, they are not like assets. So the moment you convert, and you guys need to remember this, the moment you convert any crypto for another crypto, if you make gains on it, you are going to be paying short or long-term capital gains tax. So to answer the question, when I take profits, it depends on what my strategy is at the time. I will tell you that when I consolidated in May and took a whole bunch of freaking profits, I took profits in the form of Bitcoin and Ethereum. And that ties back into the last question. I didn't take profits in fiat. I took profits into two other assets that I believed were going to be worth much more in the long run. So for me, my long-term savings account, if you will, is in Bitcoin and Ethereum, right? Those are Bitcoin and Ether are the two answers for me as it relates to store of value. And so I take profits a lot of times that way. Now, last thing I want to say, there are a million different profit taking strategies. These are not what I just said is not financial advice. You can do 100 different things. You can take USDC and then stake your USDC if you want to do that. If you have an asset that's not stakeable, you can take profits from one asset, flop it into something that's much more risky because you've already taken your money back on the initial asset. Guys, this is literally a whole stream we could do on profit taking. But bottom line, the moment you flip one crypto for another, that asset, that becomes a taxable event.
Yes, 100%. Couldn't have said that better myself. So yeah, when you do flip it to USDC, that's it. It's a taxable event. You can keep it there, right? And then hold it, wait for the markets to drop, and then reinvest it, right? But you're still going to have to pay taxes on that USDC. You're going to have to declare it. And if you don't, good luck.
Yeah. Pay your taxes, folks. Pay your taxes.
100%. It's not worth the problems.
Yeah, no doubt, no doubt. Well, Miguel, I'll tell you what, it is about 11:30, and as much as I'd love to stay on all night, I would love to stay on here and just talk all night.
Just want to say we got a new record of new viewers all at once. We got a peak of 12 viewers. So
heck yeah. Hey, guys, we are moving. Guys, if you can exit out of the live chat, smash a like, put a comment in there pretty soon. And we have to get a little bit further into our journey as it relates to YouTube. But we have a commitment from Trezor hey, thank you guys for the love on the show. We appreciate it. But we have a commitment from Trezor that's going to start giving us hardware wallets to pass out to the as rewards. So guys, we're looking for you to be subscribed to Debate Crypto, to The Crypto Keeper, which is my personal YouTube, and Miguel's personal YouTube, Blockchain Crusader. So guys, listen, if nobody's told you before today, we love you. We hope you have a great night. And until next time, hodl like it's hot.